Hey everyone, welcome back to Swan Signal Live. Of course, this is a production of Swan Bitcoin at swanbitcoin.com. We have a monster show with you today with Raoul Pal and Vijay Boyapati. Before we dive in, just a quick word about what we're doing here at Swan. We built the safest way to accumulate Bitcoin with automatic recurring buys. You can be confident when sending your friends and family to Swan. We're laser focused on accumulating Bitcoin for the long term. We have no distractions from altcoins. We're dedicated to Bitcoin education in our effort to help your family and friends become long-term Bitcoin hodlers. Before you start sending them our way, though, go ahead and grab a referral link with our referral program called Swan Force. You can sign up for that at swanbitcoin.com/enlist, ENLIST. Your friends will get $10 of Bitcoin dropped into their account, and you'll earn 25% of their fees on every Swan purchase for 3 years. You can start stacking some meaningful sats that way. So get your friends and family signed up, send them over to us. We will take good care of them and move them along that Bitcoin path through the rabbit hole. All right, today we're joined by Raoul Pal. He's the co-founder and CEO of Real Vision Group. He's an economist and investment strategist and publisher of the Global Macro Investor, a monthly newsletter, right? GMI.
Yeah.
Welcome to Swan. Swan Signal Live, Raoul. All right. And joining Raoul today on the show is Vijay Boyapati. He's a software engineer and author of one of the most recommended introductions to Bitcoin, The Bullish Case for Bitcoin. Welcome, Vijay. How's it going, man?
It's going well. Good to be with you guys.
Yeah, I appreciate it. All right, let's dive right in here. So it's clear, obviously, to everyone at this point that we're at an inflection point, a very important inflection point in modern history. The fiat money experiment of this era has reached its inevitable crescendo of debt, just as the world's economy is rocked by an economic shutdown as the result of the pandemic. So, Raoul, let's start with you. Can you set the stage for us here by summarizing your research on the state of the global economy and how our fiat money standard contributes to the risks it faces now?
Yeah, look, this is a long story, and this story started back in the 1980s. It was the Reagan-Thatcher years where it was decided that, I think it was Thatcher actually started it, that she wanted to financialize parts of the economy that weren't financialized. And in the UK, it was giving people the ability to purchase their, what were known as council houses. So that's kind of housing projects in the US. What that did was turn a generation of creditors into debtors, and debt took off. And the financialization of the global economy took off as Reagan adopted these strategies as well, and credit became available for everybody. And the realization was that credit could juice growth. Nothing wrong with that. But as things developed over time, credit became a larger part of the economy. And by the time it got to Alan Greenspan, it had become the key driver of the economy. So now the Federal Reserve had to do something they hadn't done before, which was try and manage the business cycle. So before, the business cycle just goes up and down, but they realized that if they weren't careful, they would drive a credit cycle that was much larger than the economy could deal with, and that its fragility was basically baked in the cake because of what had happened with credit. So with that, they started using interest rates as a strategy to manage the business cycle much more actively than they used before. And that created the moral hazard and the ability to take more and more risk and more debt. So debt now became everything. And debt to GDP measures, whether it's private sector debt, public sector debt, finance sector debt, all of this stuff exploded. And we've been living with that in a rolling format for the last 10 years or so. In terms of trying to manage it. So what I'd looked at, and many of us had looked at, is, okay, at some point there's a logical conclusion, and there are different conclusions you can reach, but at some point it gets to a problem. And I don't think the US defaults on its debts or anything like that, but it becomes to a point where it becomes so unmanageable that something has to change. And my view always was that eventually we'll get to that time horizon. And so the time horizon seems to be now, where the last recession was patched together, the global financial crisis. We avoided a recession in 2016, and then finally we got a recession that was coming, and then the pandemic laid on top of it. And now we're going to be in something that's probably going to drag on much longer. If you look at GDP growth, it's probably kind of globally -5 to -7% year on year. And it's very, very slowly getting better. In some cases, it's rolling back down again as new lockdowns come. And that leaves a problem that to service all this debt, you need cash flow. And cash flows have been impaired. Some people don't have cash flow at all. So the whole parts of the tourism industry, whole industries have lost their cash flow. Others got impaired cash flow. Same with households. So the problem is that can drive insolvencies. Now, usually the answer the Federal Reserve have been to liquidity crises, when there's not enough money in the system at that short period in time, as we had in March and as we had in the global financial crisis. This time we probably got a solvency crisis, and that can't be dealt with by the central banks, and interest rates anyway are at zero, and they're likely to go negative. But there's an inability to deal with this. So that means that the next wave forward is going to be massive fiscal stimulus. And there's no way of absorbing that amount of extra debt, really, particularly at these kind of interest rates. So the most likely outcome is it goes on the central bank balance sheet. And that's been the big change over the last 10 to 15 years, is the central bank balance sheet initiated by Japan and then, really blown up by Switzerland as well, Europe and the US and the UK, meant that all across the world at the same time, the central banks take all of the strain of the entire system. What that does is in a fiat money system, you're essentially creating more money. Now, a lot of money got created by credit, but this is central banks' pure printing of money to try and stimulate economies. That's what's likely to come. Now, I know there's a big kind of shit fight that goes on that, the US dollar is going to collapse or whatever it's going to be. Don't think of it in those terms. Think of it as the whole fiat money system is just being devalued over time because everybody's doing the same thing. And therefore you can see that, and that is the rise of gold and Bitcoin. So that's basically what's going on.
Fantastic. Thanks for setting the stage there. That was a great rundown of a very long history and very complex situation. So Vijay, can you comment further on here, kind of take it from here and talk about what role Bitcoin has to play on the global stage at this pivotal moment in history?
Yeah, well, firstly, I think I would agree with most of what Raoul said, but I would sort of start the timeline a little earlier. I think the sort of fiscal anchor, the responsibility anchor, was sort of cut loose in the early 70s when when the US detached itself completely from the gold standard in 1971. It had partially detached itself in 1933. You couldn't redeem your dollars for gold anymore. Where I think I agree with Raoul is this is, in my opinion, the most deflationary period since the Great Depression. Income streams to service debt have been obliterated across the entire economy. And there's a very popular meme right now, money print to go burr. And I think it's kind of misleading in a way because money that's printed is only inflationary if it makes its way into the economy. It has to be lent into the economy. And the problem is lending is impaired because income streams are impaired. So I think there's a greater risk of a deflationary period right now than an inflationary one. But typically, deflationary periods are accompanied by monetary chaos. They're very chaotic. And governments try to prevent deflations from running their full course. Raoul mentioned that this is an insolvency crisis. I completely agree because of the impairment of income streams. But 2008 was also a crisis of insolvency. The Federal Reserve tried to make it seem as if it was a liquidity crisis, but it was an insolvency crisis. Banks had lent to projects that ultimately the debt could never be serviced. They were lending to people who had no income stream. People on minimum wage buying houses for like $500,000. It's never going to work. So I'm not necessarily worried about hyperinflation or a Weimar type situation, but I am worried about monetary chaos. And what what Bitcoin buys you is an escape hatch, an ability to get out of the financial system and into a new financial system where there is no debt. And the financial system will be built on a solid base, which is a limited supply, uncensorable monetary base, much as gold was in the 19th century under the classical gold standard. So what Bitcoin provides us is an escape hatch out of monetary chaos, which I think we will see over the next decade into something much more stable.
Raoul, how about you? Vijay, obviously makes some good points there. Do you have anything to add to in terms of how Bitcoin will play a role here in this crisis?
I mean, I 100% agree with everything he said. I mean, the deflationary environment is exactly that. The question, but there is, because it depends how you define a lot of stuff here, but the increase in money, I understand there's no money supply, and I don't believe in inflation. I'm a deflationist by nature, but the overall purchasing power of fiat currency overall, I think, falls against other things. Bitcoin is two things. I think it's the world's best, most pristine reserve asset. And in a moment where there's a lot of obligations owed on other forms of money, it becomes incredibly attractive, as does gold. But what it offers over gold is it offers a call option on the future. And I think that's the powerful combination that this has that I think is truly extraordinary. It is a tangible, understandable in some respects, asset that is a perfect reserve asset, but it has that upside of being the call option of a future financial system that is so desperately needed. And yes, at this point in time, it works as an opt-out. You can ask anybody in Turkey. I mean, there is no surprise that the Turkish national football side is sponsored by a Bitcoin brokerage house, because people understand that they need to get money out. And that's a perfect example of how right here, right now, it works for exactly the points Vijay raised.
Yeah. In the last GMI monthly newsletter, you talked more about Bitcoin as a pristine collateral. How do you compare Bitcoin as collateral to bonds, which have typically been collateral in this fiat system? What are the impediments? You talk about a yield curve needed to be established for Bitcoin to really take it to the next level in terms of collateral. So what impediments to Bitcoin do you see? And can you talk a little bit about the yield curve in terms of becoming a preferred collateral?
Yeah, so if you think about what collateral is, it's something that you pledge or you lend out for somebody else to borrow. And the reason you pledge it is it's a stable asset of which you can borrow against. So it needs to be something that has provable value. So the world runs on US Treasuries as the bottom of the collateral pile. It's not gold, it's US Treasuries. That's what every central bank, every single person will accept. Now the problem is with that collateral is when I lend it, I actually get virtually no money to lend it out. So there's the risk of lending it into the system is much higher than the yield that I get for lending it. In addition, the problem is that collateral is over time, the value of that money gets devalued by the increase. So in the old world of the business cycle, when there was a collateral shortage, which is the classic sign of a credit cycle, which is normal, it self-regulates because the cost of collateral goes up and therefore the weakest borrowers default. But we've created a system where that's not allowed to happen any longer. So the Federal Reserve forces collateral into the market and basically gives it away for free. So those lending collateral get no return on it. And there's never a shortage of collateral per se. Now, there can be, because if the banks don't lend money, there's a whole bunch of other systems around it. But really speaking, they're trying to stop the business cycle, i.e. the credit cycle happening. Now, what's interesting about Bitcoin is I think it offers an alternative because A, there's no credit attached to it. Nobody can issue more of it, so you can't kind of devalue the collateral and you can't manage the business cycle. So you get back to what the gold standard used to do, which was allow the business cycle to operate normally. And that gets rid of some of the larger excesses, not always, but mainly. So that's a really interesting situation for Bitcoin. And why it's superior to gold, for people who want to go back to the gold standard, is everything of its divisibility, its transportability, and all of those other functions of it being digital, and also its store on the blockchain. That allows everybody to know where the collateral chains end up and who owns what. And even gold has problems with that. So it's you understand who owns it. It's easily transportable. It is unique in the fact that it never differs. It doesn't have to be assayed like gold because it comes on the blockchain and you know exactly what's what. So as a collateral asset, it's really good. So could that be accepted? Well, right now it's pretty volatile. So it's not a great collateral because, you know, it can go up and down. You know, it's what, 60 vol? And a treasury bond is nothing like that. But I'm thinking about the future. One of the reasons volatility is so high is as yet it's not institutionalized. So the markets aren't deep. But also there's no lending market. So DeFi is the start of the money markets, but we haven't got a yield curve further out. So I can't lend my Bitcoin that I'm storing for, let's say, 10 years. There is no market to do that. And I'm not being rewarded for that yet. But eventually there will be a market which will create a yield curve. And once you create a yield curve, you can create all the other functions of financial markets off the back of it. And in terms of collateral, you can price it correctly. Now, what becomes really interesting about Bitcoin is in a credit cycle, there'll be a shortage of it because it'll be expensive and the price goes up, and that's how you adjust the expensiveness. Plus the cost of borrowing that collateral should be pretty high because it's pristine collateral. So because there's no new supply, the cost of collateral goes up a lot in a credit cycle, and that forces the weakest creditors into bankruptcy or restructuring, which means that we end up with less massive macroeconomic imbalances. So I really do think that there is a very big future for Bitcoin itself as the world's reserve asset. I don't think it's ready yet, but it's somewhere where we can go in the future.
Yeah. Vijay, of course, you know about the MicroStrategy news. Twitter has been a buzz about it since the initial announcement in August from Michael Saylor that they're moving the MicroStrategy's corporate treasury over to a Bitcoin standard. Since then, they've also announced an additional purchase, and Michael Saylor's been making the rounds, including on Real Vision. Raoul's show, Raoul interviewed him last week, and I highly suggest watching that interview. So Vijay, this move obviously adds to the bullish case for Bitcoin. I would love to hear your thoughts on this news, what it means for Bitcoin and for corporate treasuries, maybe even sovereign treasuries moving forward.
Well, what I take from MicroStrategy's investment is mostly that it sets a precedent for companies. I think it removes the stigma associated with it. You know, I've been interested in Bitcoin since 2011. And in the early days, there was this huge stigma around Bitcoin as this tool for allowing people to trade drugs online and other illegal activities. And that stigma lasted for a number of years. I think that stigma is mostly gone, and I think this is going to be, an extra step to moving towards institutionalization of Bitcoin and making it so that other public companies can feel confident that they can invest without that stigma attached to it. I wouldn't take too much from it. I mean, Michael Saylor is a guy who has a history of very idle bets, and I say that in a good way. He made $30 million selling a domain name, and what I also take from that is he had past history that gave him a good mental model to understand Bitcoin. He understood digital scarcity. He understood that you could have something which is scarce and it has value. So he was already primed to understand the value proposition of Bitcoin. I don't think that's the case for most public companies, the CEOs of most public companies. I think this process is going to take a little more time than people might anticipate, but it's a good first step.
So Raoul, I know you're thinking about the impact or the meaning of this move from MicroStrategy has probably evolved since the initial announcement in August. Have you been like bullish on this move from the beginning, or have you sort of become increasingly bullish because of this move, or maybe it doesn't matter as much?
I think it's part of the narrative we know to expect. I've called it the world's biggest front-running opportunity. And essentially we know that at a $200 billion market cap, it's not even an asset class, it's noise. You know, if you think that FX trades 4 trillion a day, I mean, this is nothing. But we also know that it's attracting a lot of attention as many people have the light bulb moment. And that eventually leads to the price rise. As the price rise, the market cap's going to rise, and more people will come in. We'll see as soon as the Bitcoin ETF comes out, the RIA community will come in. As soon as the market cap goes up further, the pension plans will come in. So we know that this is a process. So this is just a marker stone. I think Michael, brilliant though he is, I don't think he's going to persuade many corporate treasurers to do it, because he comes from a very far away understanding of what this is. He comes from the rabbit hole. When really, if you're going to get Apple's corporate treasury to do this, it's all about diversification of their portfolio as an asset. And I think that's going to come. I don't think we've done enough work on that as a community yet to show how good it is as a diversifier of returns. I think that is where the real value adds for treasury. So I don't think, sure, you know, could Jack Dorsey try and do something, and a few people who love Bitcoin, yes. But until the investment banks probably go out and tell people how this diversifies their return stream, it's not going to be copied in great strength yet. But that's all coming. These are just marker stones on the way of where we know it's going.
Yeah, it's still relatively early, as we say. It's early until it's not, and at some point that inflection will hit on the asymptotes, and things will the race will be on. So I want to also talk about, or go back to DeFi, which you mentioned earlier, Raoul. And in last month's GMI, you also talked about a revolution in DeFi. You said that it's even possible that the Ethereum ecosystem in due course could be worth more than the Bitcoin ecosystem, just due to the scalability of its application. Again, you say it doesn't compete with Bitcoin; it complements it. So you want to talk more? Yeah, go for it.
Yeah, people get in such a stew about this in their tribalism. I don't think of Ethereum as a currency. And I know the Ethereum 2.0 guys will say, well, it's going to be, and it's going to be in scarcer supply. I just don't think that's its value proposition. And I don't think yet that Bitcoin's value proposition is the ecosystem. I think it's too valuable a collateral to do that with. I think its place will become as that pristine kind of foundational stone of this whole new financial system. Ethereum to me feels like a platform, a system, a layer. And so could that be worth more than the underlying? Of course it will. Because if you think the derivative market is worth a lot more than the underlying treasury market. So they're different things, but it's all part of this world. Much like central bank digital currencies are part of this world. Much like even private blockchains are part of this world. Everyone needs to get over this. They're all part of the same world. That doesn't take away from Bitcoin. They're not in competition. So if we look at it in market cap terms, we're looking at the wrong thing. So that's how I kind of think about it.
Mm-hmm. So Vijay, I would like to get your thoughts on DeFi and the role Ethereum might play, as it relates to Bitcoin in the future. Are they playing a zero-sum game here or not?
Well, this is the one area I think I probably differ with Raoul, and you can count me in the tribe for sure. I am deeply, deeply skeptical of Ethereum, and I work in the industry, and I'm exposed to hundreds of these altcoins. Most of them, honestly, are complete garbage. They're copycats. Ethereum is not that. It's not a copycat. It is trying to do something interesting. But I also think Ethereum is fundamentally flawed in that it's trying to bite off more than it can chew. It's trying to solve a problem in computer science that is an open question. It's just, to me, this is an experiment. Can you have a distributed database, a Turing-complete computer that can scale? I think the answer is no. I think this is essentially impossible. They're running the experiment right now and trying to see whether this is possible. But I think, ultimately they've been trying to do this for the last 5 years, figure out a way to scale Ethereum. And I have not seen any meaningful progress on this front. And as soon as you get any meaningful number of transactions on Ethereum, the whole thing is going to fall apart. Now, Bitcoin doesn't suffer from this problem, because Bitcoin, I completely agree with Raoul, it's a collateral system, it's a monetary base, and ultimately it's going to be used for settlement between large financial institutions. I mean, that's not what it is now. It's mostly owned by retail, but zoom ahead 10, 20, 50 years into the future, it's going to be a means of settlement. And you don't need Bitcoin to scale in the same way that Ethereum needs to scale. The number of settlements that happen between financial institutions every day can easily be handled by the Bitcoin blockchain. Of course, you can't get every coffee payment on the Bitcoin blockchain. That's not what it's for. But settlement can happen. And if you need greater settlement than is available with the block space on Bitcoin, then you can always go to the Lightning Network, and institutions can create payment channels between each other. I also think Ethereum is not a system that is going to attract major institutional investment, because it really is too much of an experiment. I mean, Bitcoin's value proposition from my point of view is that it has a credible monetary policy. It has, and again, unlike Ethereum, Bitcoin has faced a real test about whether its monetary policy can be sustained with the 2017 network split. Would the market follow the legacy chain or not? If it didn't, if the market went with the new chain, the chain which said we're going to increase the block size, to me that completely blows out the value proposition of Bitcoin, which is that it's immutable and that you can trust the monetary policy. I have no trust whatsoever in Ethereum's monetary policy. I have no idea what they're going to do. They could decide that it's better to set the inflation rate to 10% a year because that makes it easier to do smart contracts. You have enough gas or whatever it is. I mean, I have a lot of problems with Ethereum. I think another one is, fairly significant is Vitalik Buterin is a systemic risk to Ethereum. I would never invest money in something where something bad happening to him, and I do not wish anything bad to happen to him. He's a smart kid, and I wish him all the success in the world. But he is a systemic risk. If something happens to him, that's going to be a huge blow to Ethereum. He's sort of this founding has this founding sage role in Ethereum, and he also helps direct development. The other thing I would say is that I think when Ethereum was put to the test, it failed. The DAO hack is an example where they said, we're going to roll back a payment that happened on Ethereum because we think it's harmful. That just completely shows that this system is not immutable. And if it's not immutable, then just use a database. Blockchains are inherently inefficient. You only use them when you're solving a problem of social scalability. If you're not solving a problem of social scalability, like rewriting the monetary system, it's just much more efficient to use a database. And I personally have not seen a good example where something built on Ethereum could not be done better with the database. You look at the history of Ethereum, you go back to what it was originally sort of marketed as a world computer, and then it was dApps, and then it was ICOs, and now it's DeFi. I sort of see this as a narrative chasing vehicle, and it's good at narrative chasing because it's Turing complete. You can do any kind of computation on it, which some people think is a good thing. It certainly makes it good for narrative chasing. But I look at the history of Ethereum, and I think this is something that has been responsible for massive capital destruction. You look at the developer time and investment in dApps, not a single one of them would have been in the top 100 on any app store. You look at ICOs, how much capital is completely blown up by ICOs. And now you look at DeFi. And my last comment about DeFi is that as soon as decentralized finance makes reference to something in the real world, whether it's a mortgage or a commodity market or something like that, the decentralization loses its value because states can come in and regulate those things very easily. So I don't think there is any value to decentralization. So I have a lot of problems. I'm summarizing all of these in any one of these things I could spend some time writing or talking about at greater length. But I am very skeptical of Ethereum. I think it's an experiment. I think from my perspective as a computer science, I think it's an experiment that will fail. It's an experiment which I don't think any of the brilliant computer scientists have managed to solve over the last 50 years. How do you scale a distributed database that needs consistency? It needs consistency because otherwise you lose capital. So I'm skeptical. This is honestly, with all respect to Raoul, because he's a brilliant thinker, and I think I agree with him on everything except this. I just don't see this working. I think I think DeFi is gonna fall apart again, just like the ICO craze did, and I think a lot of capital is going to be lost in this next bull market with the mania that comes with it.
Raoul, I know that you are really kind of just diving down this rabbit hole and trying to understand what's going on with Ethereum and DeFi. There's a lot there, a lot of history, and I wonder, given what Vijay said here, if you think that these kinds of financial applications could be developed on top of Bitcoin, and Bitcoin is the preferred money. Do you think that the future of DeFi is on Bitcoin instead of Ethereum? Maybe.
No, I actually don't. Look, you can via the Lightning Network, other things, create other layer solutions, but I kind of disagree about the whole Ethereum thing. And I'm not a weeds guy. I'm a probability guy. I'm a macro guy. Is there a probability, after all this relentless testing that goes on Ethereum, and it's not gone away, with all the businesses that fail and all the businesses that succeed, is there a probability that it adapts into an ecosystem that has true value? Well, if there is, it's probably undervalued. What is that value? I have no idea. But I deal in future probabilities, and I think there's a future probability that things work on it. Because when we talk about the failure rate of tokens, of course, because they're all new. Nobody's got a bloody clue how this stuff works. And it's much like VCs who invested in the internet in the 90s. Most of them lost money, and that's okay, because out of failure builds success. So I don't know any answers to any of this, and none of us do. But I think there's a probability. And I think that probability is real because there is an adaptability to the ecosystem. Now, could that happen on Bitcoin? Sure. I'm much longer Bitcoin than I am Ethereum, so I'd be delighted. It makes no difference to me. But I'm interested in the overall thing. The DeFi space, I think most of this fails first time around. I think people are asking the right questions. I don't think they found the right solutions yet. I don't know. I do know that we haven't gone through a risk cycle. So nobody actually knows what the yield is. You only know what the yield is once you've been through the up and the down cycle, and then you can have a yield and look back, because it certainly is not the yields people think it is. It'll end up being somewhere closer to market rates. And over time, those yields will get arbitraged back down to where money market rates as banks and traders enter the market and arbitrage the two lending rates. So I don't know where it's going. Can Bitcoin do all of this? Yeah, it'd be a bloody shame if it did. It's like building a full derivative market on Bitcoin. It would be a terrible shame, because then you're just recreating the mess of another financial system all over again. Yes, it's on blockchain, which helps. So I hope not, is my answer. I'd rather have two systems.
What do you think is the probability of a derivatives market being built on top of Bitcoin, given its, the different monetary properties it has in the fiat system, which obviously I think it's much easier to build derivatives market on top of. What do you think about the chances of derivatives being built on top of Bitcoin? You think it's any less than it would in fiat system?
Sadly, no. We're going to do it all over again. And look, derivatives are good. They will lower volatility. They'll bring more entrants into the market. They'll give us new products to be able to trade. Look, I've been in the derivative market my entire life. It was, the only thing that I've ever seen that is nearly as big as what Bitcoin is what the derivative market was. I mean, it has changed everything, and it became the monster by the end of it. But incredible. I mean, the world couldn't exist. We humans will create the same thing. They did it in gold in the past. It's not going to go away. We humans love credit, and we will create it any way we can. I mean, everybody who thinks the gold standard didn't have booms and busts and depressions and recessions and deflations and inflations, it's a lie. It's a false narrative. They had all of those things, and they had massive credit cycles too. So there is no panacea. Nothing is going to solve humans' issue with greed.
Fair. Vijay, any reaction to that?
No, I agree with that. There were certainly credit cycles under the gold standard, and I sort of view these things as orthogonal, the derivatives market and the monetary base. I think it's totally possible and much more likely that Bitcoin will be the monetary base and the derivative market will be built on top of that monetary base. I don't view crypto as an asset class. I view it as an asset race, and I think Bitcoin is like Usain Bolt with a 50-mile head start. The network effect is much stronger. The amount of resources devoted, the mining energy that's put into Bitcoin, the brand. You'll never hear Ethereum mentioned in a mainstream publication without Bitcoin also being mentioned. I just think Bitcoin is way too far ahead. It's a race, and I think Bitcoin is going to win. I think, if you think about the bullish case for Ethereum, is that you'd have some sort of financial system built on it that's valuable enough that you need ETH to invest in that financial system. I just don't see that happening. I think these things that are being built are kind of cute. The DeFi stuff that's being built is cute as an experiment. I just think it can't scale.
Why could it not be? Why could it not be like a share price? Let's assume it's Google, right? Let's call Bitcoin Treasury bonds and Ethereum Google, right? To compare the two is not the same thing. Why could it not be a share price? What you're buying is a share of the future expected returns of that platform. Nobody's saying it's money. Nobody's saying it's a reserve asset. Two entirely different things. Could it not be that?
I don't believe so. I mean, I think they're both competing for the same reservation demand. I mean, that's how money gets its value, is reservation demand. People
are suggesting Ethereum's money. Who's saying it's money? Why is it just not?
It's acting as a monetary base on its own system. It's the way that you can do anything on Ethereum. You need to get hold of it. That's how it gets. That's how.
I don't think that's money. I think that's a slot on the blockchain, and you pay for your right. That's okay. I buy a theatre ticket, and it gives me a seat. I mean, I don't see why we have to think of Ethereum as money. I mean, I don't think it's money in any way, shape, or form, and should never be compared to Bitcoin. I just think it's like Google versus Treasury bonds. They're just part of the same universe of securities. No?
No, I don't think so. I think they're both forms of money competing against each other. All monies get their value from reservation demand, which is the desire to hold it. Ethereum gets its value, its price level from people holding it, not doing anything with it. And I think people are convinced that there's value in holding Ethereum because someone else might use that Ethereum in the future for some application. And I don't buy that at all, because as I said, I don't think Ethereum can scale. I don't think once you get to doing finance at any kind of scale, Ethereum falls over. It's already falling over. If you look at the fees on Ethereum right now, at the very most nascent part of this DeFi revolution, it's falling apart. If you're going to need to scale this thing, if it becomes like a sort of a global system for finance, you're going to have to scale it 1,000x, and I don't think it can scale 10x. So I don't believe that it has I don't think they've solved these problems in computer science to make this work at anything more than an experimental scale.
So Vijay, the purpose, what do you think is do you think that there is any other purpose for a blockchain aside from money, or an ultimate purpose? Let me put it that way.
I do not. No, I do not, because blockchains are massively inefficient. They're a broadcast system, so they are already 100 times less efficient than doing it on a database. And you do something that inefficient if you're solving something that makes society as a whole much more efficient, if you get social scalability out of it. And if you're replacing money, that's an example of that. You are making society much, much more efficient if you have a better monetary base. Yeah, the problem of scalability is also important as well. I think Bitcoin, when you're dealing with a reserve asset, you don't need it to scale in terms of transactions. So it doesn't matter if Bitcoin has a fixed block size, because it's going to be used as a reserve asset in the future. And I think that's something that Raoul and I agree on. It was very important to me in 2017 that this huge debate happened and that it was ultimately resolved. The market resolved it in favor of Bitcoin as a reserve asset, not Bitcoin as a payment system. I don't think any other cryptocurrency has faced a test anywhere close to as important as that for Bitcoin, where all the most powerful companies in the space tried to change Bitcoin in their favor to make it so that transaction fees were low, which was good for their business. And it was completely rejected by the market. That was a very, very powerful sign. And I think that is the thing that makes me more bullish about Bitcoin than I've ever been since, the beginning, 2011. I think it's no longer an experiment. I think this is a real reserve asset. And I think that's going to be recognized by the market slowly and surely over the next 10, 20 years.
So, Raoul, do you have anything to close up? We'll wrap up this conversation. Just any closing thoughts on, I guess the probability again that Ethereum will find a use case.
Yeah, and again,
ultimately, it's not money.
Yeah, I mean, again, just to state my case clearly, because most people misunderstand this, is I do not think of Ethereum as money. I don't think of anything like Bitcoin. When it comes to reserve asset and the purity, I'm a Bitcoin maximalist saying there is only one. As Vijay said, it passed that test. I sold out. I was long from, I don't know, $200 and I sold out into that huge rally, seeing what was going on. And I don't trust this. I don't know what's going to be the outcome. The outcome was the fork, and it all went to the existing blockchain, and that was brilliant. And as Vijay said, I think that was the big test. So I don't have any doubts in my mind what Bitcoin is. I'm really interested in the whole digital asset space. I am involved with all sorts of people where I'm talking about the future of music industry, the future of supply chains, all sorts of things. I don't think that's a good use of the Bitcoin blockchain, but I do think it's a good use of blockchain. And yes, blockchain absolutely is a database, but it happens to be pretty good for certain reasons. And it doesn't have to be efficient because it doesn't have to be a social one. There can be other variations and uses for it that I'm already seeing everywhere. Just the ability to have the recorded ownership, even amongst a group of trusted parties, in blockchain form is actually quite useful. So I'm not worried about that. I'm incredibly bullish on the digital asset space. I don't buy any tokens. I don't do any of that stuff. I'm interested at a macro level. But I do see a huge opportunity for future investment in long-short strategies in tokens, because I think there's some really interesting businesses out there that most of them get written down because it's a very behavioral wash-in, wash-out strategy. I think that's very interesting. I think there's going to be a lot there. And again, it's nothing to do with Bitcoin. It's nothing to do with the competition. It's nothing to do with the currency. They're just different things. They just both happen to be digital. And they both happen to use blockchain. That's all, I think.
Vijay, it looks like you want to have one more response here.
No. I mean, Raoul,
I think this is a great conversation. It's very useful. I know Bitcoiners and Ethereans want to hear it. So, and from the two of you, I think it's a fantastic conversation. So if you want to keep going, please do.
Honestly, I'm just listening in earnest. Raoul's a brilliant thinker, and he's entitled to his opinion. I disagree, and I'm sure we both have our money where our mouth is. I've had the opportunity to invest in Ethereum since the very beginning. I've not taken it because I've given the reasons. I have no conviction in it, and I see it as an experiment. I can't put my money in something that I think is an experiment that I think is going to fail.
Yeah. And just so I'm clear again, just because everybody in the Bitcoin space gets all wild about this stuff, the biggest bet I've ever taken in my entire life in putting into one thing is Bitcoin, of which I have about 20% of my entire allocation to the entire space to Ethereum. Everything else is Bitcoin. Because again, I am not thinking of them as competing assets. Bitcoin is my bet. That's the big bet. I'm interested in digital assets for a different reason. So again, before anybody, I could see the comment section. Everyone's like, "Oh my God, there is no dissing about Bitcoin. It is my single largest bet. I'm incredibly, wildly, ridiculously bullish." And that GMI piece, the article actually was called "The World's Best Trade."
The world's best trade.
Bitcoin. And that's the point I'm trying to get across here. I'm not conflating the two. I'm not an Ethereum guy over Bitcoin. I just think they're totally different things.
Yeah, you're interested in the probability that there may be a probability of future value of the project.
Yeah, if I believe that Ethereum had a much higher probability chance of success, I would have a higher weighting. I don't.
Yeah,
because Bitcoin to me has an almost guaranteed chance of success. I also happen to think that from a number of other reasons, there is a potential that Ethereum could be valued more. Doesn't make it a better asset.
Yeah. So you're Pareto long Bitcoin, 80-20. And I think you've mentioned this before, but just to get it on the record here, would you share your distribution in your whole portfolio long Bitcoin? Yeah.
So of my liquid available assets, that's the money I've got to be able to either save or invest. Mm-hmm. I am currently 50, 60 something, 65% in Bitcoin and Ethereum, of which Ethereum is only 20% of that. Mm-hmm, mm-hmm. I am about 5% cash and a bit in gold and some trading strategies. But really, over time, once Bitcoin starts getting some price momentum, it's going to, and I don't use leverage on stuff like this because this is kind of your whole lifetime savings kind of stuff that you've got available. I will get up to at least 75%, maybe 80% long in this strategy of everything that I have in available investing assets. So I can't tell you how bullish I am.
That's Giga Chad Michael Saylor levels, getting close to it there, Raoul.
Yeah. So again, when people try and pick holes and say, well, Ethereum, forget all of that. Just look what I'm doing. Yeah. Not what you think I'm saying.
Yeah. All right. That was fantastic conversation. That's one of the main things topics that we were getting a lot of requests for when we made this pairing. And I think that was a very worthwhile conversation to have on the record. So let's start with you, Vijay, and I'd like to hear from Raoul on this as well. What do you think are the biggest obstacles to Bitcoin becoming successful at whatever level you want to say? Maybe you could take it through some different scenarios all the way up through Bitcoin becoming a global reserve asset. What are the obstacles that you see that Bitcoin faces?
I mean, in terms of risk, I think the first thing needs to be acknowledged is there's always protocol risk. This whole thing is built on cryptography. This is not like, it's not like gold where it's a physical thing that we know is part of reality and we understand it. We've understood it for thousands of years. The protocol risk has diminished substantially over time, and that's partly because of Satoshi's decisions. He was very, very conservative in the cryptography he built Bitcoin on. It's very old. It's been tested for a long time, and it's well established and understood. But in terms of risks to Bitcoin becoming the world's reserve asset, I think there's only one risk that matters at all, and that's a state attack. If and when a state attacks, Bitcoin cannot survive. And to me, this is a question of whether or not Bitcoin gets enough political capture in time for a state attack to come, because I think it's going to be inevitable. Bitcoin becoming the world's reserve currency is going to disrupt so much of how the world works. and upend power structures across the entire world that a lot of entrenched interests are going to want to sort of come down on Bitcoin. And the question is whether they realize this before it's too late. And sort of you can think about the internet in the same way, or another example I actually give is Uber, the car riding app, where Uber would go into markets and there'd be these entrenched interests, the taxi lobby, and they would fight really hard to get their local and state governments to regulate Uber and make it behave in the same way that the taxi cabs behaved. And Uber had the benefit that they got into these markets and they got enough political capture very quickly. They had a very strong lobby, natural lobby from their drivers and also from their users who didn't want Uber to be a taxi company. So the local city government or whatever would start, trying to regulate Uber, and then they'd have this massive people petitioning their local government saying, no, we don't want that. And to me, the question is whether Bitcoin gets that capture in time for a state attack to happen. And it really has to be a global, coordinated nation-state attack to harm Bitcoin, because we've seen China try to ban Bitcoin. It doesn't really do anything because the network continues to function and people continue to trade Bitcoin. So I sort of look at this and I think, how long is it going to be before we have enough people with enough ownership of Bitcoin and people in Congress who own Bitcoin? There are already a few people, but it needs to be a much greater number. And I think there was a paper written somewhere about how it's somewhere around 30%, where if you get a minority who's really in favor of something and that minority grows to somewhere around 30%, it's very hard to stop them passing something that's in their benefit. And an example of this was the legalization of marijuana in various places in the US. Marijuana was illegal for a long time, but over time people became more and more comfortable with the risks involved with their fellow citizens smoking or using marijuana, that minority was able to overturn these rules. So I don't think we're there yet. And I think you can see already from the establishment the faintest inkling that Bitcoin is a threat to the establishment. There was a piece in the Wall Street Journal a few years ago saying, if Bitcoin becomes the world monetary base, it's going to hamper central banks' ability to manipulate interest rates. It's like, yes, that's the point. So they're recognizing this as a threat, but they are not acting on it. And the narrative that sort of goes around DC right now is that we don't want to hamper innovation. They're sort of very pro-innovation and pro-Silicon Valley mindset. But I view this as kind of a conflict between the banking system and the people who would lobby in the banking system versus people, Silicon Valley type people who lobby for innovation. And I think Bitcoin is going to get to the size in the next cycle, this coming cycle, or the one after, where it poses geopolitical risks to nation states. And they are going to pay much closer attention to it than they are now. When Bitcoin reaches the size of gold, that has very, very powerful geopolitical implications. Gold is an escape. Gold has always been an escape hatch, but it's a very inconvenient escape hatch. It's much easier to regulate gold than it is to regulate Bitcoin. It's much easier to confiscate gold. Gold has problems because of its inherent physicality of centralization. You don't, if you have a substantial amount of gold, you don't keep it on your mattress. You keep it in with a central custodian, because you don't trust the security of your mattress. And that historically allowed nation states to go and confiscate that gold. They said, all the gold's in the banks, let's just go and confiscate the gold. This is what happened in the US in 1933, which allowed Franklin Roosevelt to delink the dollar from gold. So Bitcoin is much more powerful than gold in that sense. And when it gets to the size of gold, I think that's going to cause a lot of consternation amongst people in power in nation states. And we're going to see this cycle, perhaps, or the next cycle for sure, nation states coming after Bitcoin, in my opinion. And the question is whether it will have been distributed amongst the population enough that we have a vocal and powerful enough lobbying group in the population who don't want their savings to be confiscated, who don't want Bitcoin to be attacked, and will lobby on its behalf.
Raoul, over to you. Obstacles faced by Bitcoin.
I think the obstacle is the same obstacle of that, right? That's a dual device. Vaping came around and it kind of changed everybody's lives because it massively lowered the risk of illnesses driven by smoking. But what happened is it rose so fast in value and it became so big that the immediate threat was regulation. But how is that regulation going to change anything in the end? I don't think it will. All it does is there's speed bumps. There are speed bumps to go through. Vijay's right. I mean, the battle will happen at geopolitical level. But there's an issue there with that too, is as some state goes to ban it, another state will go and use it as a reserve asset. So it's going to be very difficult because it's distributed nature. It's kind of like a virus, right? It's very difficult to get rid of. The mining issue about, can the Chinese take control of Bitcoin because of the mining? Well, I think that the US has got a lot of plans, and we've seen that by using, let's say, excess gas supplies in Texas to run cheap mining. I think sovereign states will do stuff like this. So I think there are checks and balances within the system, but I do think these are all speed bumps, and we have to go through them all. And each one we get through will test its resiliency and prove its resiliency over time. There are lots of battles to fight, and the war hasn't been won, but I think the probability of the war being won is extremely high.
Excellent. Vijay, I'm mindful that you have to take off here in a few minutes. Do you have any closing words for the audience?
I just echo what Raoul said. I assign a very high probability to this. I view this in a sort of longer time scale than some of the people who I would say are in my tribe, Bitcoin maximalists. I'm very, very bullish on Bitcoin over the period of 50 years. I think it's going to be greatly beneficial to hold Bitcoin for my grandchildren. I'm not sure how these cycles are going to play out over the next few years, but I almost have a sense of inevitability to this. Its distributed, decentralized nature makes it, just as Raoul said, like a virus. It's a very, very hard thing to kill, and it would take a coordinated nation-state attack to kill Bitcoin, in my opinion. And I think it's a fairly unlikely event. I think you're going to have a patchwork of nation-states trying to attack it at various times, and that will improve its resiliency. So I view this as, I view Bitcoin as the most important innovation to money in 1,000 years, and money is the biggest market on earth. So I sort of think it's imperative that if you're paying any attention to this space, you have some allocation to Bitcoin. It should not be zero. This is a very, very disruptive technology to a very, very big market.
Excellent. Thanks so much, Vijay, for joining us today. Good luck and have a great day.
Thanks, guys. It was great speaking to you, Raoul.
Yeah, great to speak to you too.
Raoul, we'll stay on with you for about 10 minutes if you're willing.
Sure.
All right, great. Vijay is not in the business as you are of actually trying to make those predictions of how these cycles will play out. I'm curious, what's your current thinking for this next cycle, the next, couple of years?
The problem is now is none of us can approach this without thinking of Plan B's work. We've kind of all poisoned ourselves, and I wish we hadn't, because we're all losing objectivity, right? We all think it's now our God-given right to see Bitcoin go to 250,000 in this leg. And I believe that. I look at the charts and it kind of looks right to me. Somewhere in the back of my mind, this worries me a little bit, that we're all holding on to one person's work. And much as I love him and I love his work, it does concern me. So I don't know how it plays out. My guess is as he predicts, but and I see that from a number of different levels. But really the level that I look at it from is, what is its adoption curve? Forget retail. Retail's in it. There are more retail that will come in. But the really big part of this is, as we talked about, it's the increase in market cap sucking in others. And that's all coming, whether the Bitcoin ETF comes and that brings in the RIA space and that allows the pension funds to buy it. But it's still too small an asset, but wait till it gets to $1 trillion. And that's only, 5x increase. Then at $1 trillion, it becomes an interesting asset. And then it starts attracting the corporate treasurers, and then it starts attracting governments. So I think it's all here and it's all coming. And I see that reflexive cycle that George Soros talks about building here into something that could be surprising to the upside just by the nature of those people involved and the supply constraints of Bitcoin itself. So I actually think, and this is not because I want to sound crazy bullish and amazing, it's actually because I see this reflexive cycle setting up. I think the risk that it could be much higher than Plan B expects. Maybe it starts slower. Maybe it doesn't happen in the same way, but it feels like it could be bigger because I just look at the size of the participants who could come into this. And that would be the shock.
Yeah. Well, speaking of Plan B's work, do you think that a model that doesn't take demand explicitly into account like this can, be used to predict the future? It seems to have great correlation with the past price action, but if we don't take demand, into account,
maybe inherent within the model is demand.
Okay.
Being the thing that drives the price, and it matches or it overwhelms supply at various points. It feels that, yes, you don't model demand, but Christ, I've seen a million Wall Street analysts and all shit at that. So forget all of that. There's just something simply elegant about it that I think it takes the assumption of demand within it. It's like I can show you a price chart and there is no supply or demand in that chart. There's, in fact, no mathematical formula at all except where the price went. But I can get a better odds than tossing a coin by using a chart. So you don't need all the inputs. And usually it's overly detailed people who look for these things and then miss the woods through the trees. You need to see the forest and not the bloody tree you're in front of. And people get in this way. So I kind of am with Plan B on this is it doesn't matter. That will drive, I think, the excess demand, the excess move over his model or beneath his model will be supply and demand. Whether there's a big supply coming for some reason because somebody wants to sell it, Satoshi sells his coins, whatever it is, right? I think that's just part of the function of where it goes, but its value seems to be intrinsic in that, and the stocks to flow model, and based particularly the one that was really interesting is when you base it around other assets. So when I first saw this, and he said he'd been using it against gold, I said to him, listen, I think you can value gold, and you can value silver, and you can value all these other assets. And when you all relatively value them all, it makes sense. People don't understand that either, is gold is a fantastic relative value asset. Oil, gold, equities, real estate, they all have relative values. That's what makes them assets. And over periods of time, they get out of whack. And then eventually, capital goes into the cheaper asset. So things like farmland is an asset. There's a problem is technology drives price down, of crop drives productivity up and prices down. But farmland's extremely cheap versus the price of gold or the price of oil or the price of equities. So you could see that would be an attractive attractive proposition for, let's say, a pension fund or an endowment with a long-term time horizon. That's what makes these things assets. And what he's basically said is Bitcoin fits within that framework. So over time, it'll get overvalued versus property, in which case, great, sell some Bitcoin, buy yourself a house. Or it gets undervalued and you sell your house and buy Bitcoin. Whatever it may be, but that's what assets do. So I'm really interested in that.
Yeah. I was talking with Max Kaiser the other day about the maturity of the Bitcoin market, that would instill the kind of trust that Michael Saylor has acquired in order to make the move that he did. That level of trust in the past, and you've been writing about Bitcoin for a long time, since 2011. So this in the past, the market, the price action of the markets has been, very manipulated. And I wonder now what you think, like how how in the past has the Bitcoin price been manipulated? And do you think with the additional, like the regulations that we're seeing, the more reputable, exchanges that are being built around Bitcoin, do you think that there's like less manipulation in the price now, and will that price action be a lot more real moving forward?
That's just a question of time horizon.
Mm-hmm.
In my time horizon, it's not manipulated.
Right.
If you're looking at daily, whatever, sure, there's big players. Well, there's big players in every market.
Yeah.
I've seen Soros move currency markets around. Is he manipulating it? Well, not necessarily. I've seen all sorts of stuff. You've seen program trades from pension funds. You've seen stocks being put into indices. All of this stuff, it kind of manipulates markets. But once you zoom out of time horizon, it's irrelevant. So I don't see it being a manipulated market. And that's one of the reasons it's a 60 volatility asset. That's its biggest problem over time. Good thing is the volatility skewed to the upside, because the upside tail is so much larger than the downside tail. However, that's an issue. So that stops anybody who use risk-adjusted returns based on volatility of allocating large amounts of capital to it. Mm-hmm. That's why you can have a lot in treasuries, because they have a 3%, 4% volatility. So you can have huge amounts of money in it. So as more participants come in, the volatility of Bitcoin will come down. That's how all assets work. As it comes down, more money goes into Bitcoin. More money goes into Bitcoin, volatility goes down. So it finds its natural order volatility. And let's say gold is around 20 to 30 vol. Equities, probably natural order volatility, unmanipulated, are probably 20 to 40. So kind of similar to gold. And treasury bonds are much less, and currencies are about 8. So it's going to find its range, and it's probably going to be in that 20 to 40 range. And that will be understandable enough for everybody. That's actually quite volatile for a reserve asset, which is why equities aren't reserve assets. I only think till we get to the 21 million coins and we develop into future state, do we get to the volatility where it really is the true reserve asset and its volatility collapses down to below 10%.
Right. And at that point, do you see Bitcoin adopting the other forms of money, the other roles of money, medium of exchange, and maybe even unit of account?
Yeah, I mean, that makes much more sense at that point, right? Because I literally don't want to send you money in something that can make 5% in minutes, because I can't pay you what you're asking me if you're anchoring in a different currency than me, and Bitcoin's our medium of exchange. So right now, it's just not very useful for that. We didn't, we've accepted Bitcoin for Real Vision before. It's a pain in the arse because it's worth your product's worth more and less in the currency that we have to pay our staff in. Mm-hmm. Right. Now, I can think of, everyone will say, you just think of it in Bitcoin terms. Yeah, well, my staff don't get paid in Bitcoin. They get paid in US dollars because they have to pay taxes in dollars. So it doesn't work yet for that. But that's all to come.
Yeah, the demand for the money as that goes up, it's just it's a cycle to move from one currency to another, and we've done that many times through history, changed reserve currencies, and so we'll if it plays out that way, we'll just see another transition.
Yeah, I mean, there may be another transition before Bitcoin. Right. I have a feeling that there's going to be central bank digital currencies, and there's going to be global baskets of digital currencies, regional baskets, trade baskets like a commodity producers basket, and et cetera, et cetera. I think that's coming. But I think that all leads to the logical conclusion, which is that Bitcoin wins in all of that.
Agreed with that. All right, last question for you. This is a bit of a fun one. George Gammon was on this show last month, and he's down in St. Bart's, and was telling us that the buzz at the fund manager parties, you talk the equities, you talk the Fed, macro for a while, but then as the party sort of winds into the wee hours, the topic of choice is always Bitcoin. So I know that you're down there in the Caribbean too, Cayman, I believe. What's the talk down there with your friends when you're hanging out?
Well, I'm actually on an island of 140 people right now.
Okay.
But here's telling you something. I'm in Little Cayman. I'm having some work in Grand Cayman. The audiovisual guys are installing some new TV, blah, blah, blah. And he wrote to me, goes, I've been watching your videos on Real Vision and I'll accept payment in Bitcoin. I said, you're not having any of my Bitcoin. But when your audio-visual guys are accepting payment in Bitcoin and my yoga instructor was saying I could pay her in Bitcoin, it does worry me a bit. Out of my hedge fund friends, I mean, everybody's interested in this. And it's a matter of time horizon and how much pain people can take. I worry that I'm a bit amazed, actually, that it's not gone further up yet. And it's the correlation with the dollar. I don't understand the supply side of the Bitcoin equation. Where's all this supply coming from right now? Because we don't hear a two-way street, right? There's not like a huge short community. We're shorting Bitcoin. So
right.
Where the hell is this selling coming from?
Yeah.
Who did Michael Saylor buy all this stuff from? Even he said that.
Yeah, he was surprised.
I hear some stories about one of the, I can't remember what it was, a specific situation that generated a huge amount of Bitcoin that needed to be realized, that maybe that's the reason that it's being sat on. But it looks like it's sat on. It's currently correlated with the dollar, correlated with gold, correlated with risk assets. I think that correlation is passing. It will change. But you have to wash out some of that speculative stuff first. And maybe we have another stab down in price. We clear it out a bit, break some people's shorter term faith, the traders community. And then
Excellent, man. I'll let you get back to it. Thanks so much, Raoul, for your time. This was a ton of fun. Great to talk to you.
Yeah, really enjoyed it. Thanks so much.
All right. Take care.
Cheers.